Good morning, traders. My name's Ryan Littlestone from forexflow.live. This week we're going to have a little catch up on a trade I spoke about last week to kick the new year off, and then we're going to have a little quick chat about the pound, which has seen some action last week and into this week. So firstly, on to US dollar, Hong Kong dollar, a trade that I got into last week. What I'm looking at here is that this pair trades in a band between 7.75 and 7.85. We spent most of last year and towards the end of the year up at the top level of this band as we had the problem ongoing with China and also the Hong Kong protests. We've seen that drop all the way down pretty much to the other end of the band, down at near the 7.75 level. Now this is protected by the Hong Kong Monetary Authority, almost like central bank intervention, if you like. So they maintain this band. So when it gets to the top, they look to sell US dollar against the Hong Kong dollar. And conversely, when it gets to the bottom of the band, they'll look to protect the bottom of it as well. So I'm taking along into the bottom of this band. I'm currently long at 7.7715, looking to add all the way down into 7.75 with a stop just under at 7.74. Touch wood, hoping that it holds. But the chances are that it should hold down there and potentially means that we move back up again. There's nothing really changed in this trade at all. As I say, I'm looking to add lower in. We're not really getting down there. We got close to 7.76. The price has pulled up there, finding support into that number, and we bounced back up. And today we're sitting at currently 7.7718. Now, the next currency I'm going to look at is the pound. Obviously, we've had a bit of volatility in the last week. We've come out of the elections. We've come out of the Brexit deal passing. In fact, last week, the third reading of the withdrawal agreement passed Parliament pretty much without many headlines. That just breezed through. Such is the nature of Boris's majority that there's no more shenanigans going on in these votes and amendments being thrown in and anti-Brexit people trying to amend the motions and everything. So that sailed through pretty much without a hitch, and now we're looking towards the final leaving date at the end of January when the UK does finally leave, and then from that point we'll progress on to the trade talks. Now we have got one of the EU trade ministers, which is Ireland's Hogan. He's coming over this week for some chat, so we may get some headlines there. But pretty much what we've really shifted to is a series of Bank of England MPC members. I wouldn't say turning hawkish, they're becoming more intensely hawkish. We know we've got two voters voting for cuts in Haskell and Saunders. But then we had Mark Carney coming out and saying that if the data does soften, become worse in the early part of this year or the first few months, then he's going to be looking at rate cuts. Then we had Temrero coming out as well, saying similar. Then we've had Vliga coming out over the weekend, again saying very similar. So it hasn't changed their leanings, perhaps, although Carney was a bit more neutral. But what it's done is, as I say, it seems like there's a bit more intensity to this rate cut talk. This is something we're going to be looking at over the next few sessions. We've already had UK data out today, GDP, which wasn't the greatest, but it's old news. It's for November. It doesn't incorporate post-election moves or post-Brexit vote moves, which of course was in December, but not a lot of time there anyway. So what we want to see is the pound's weakened. It's under 130. We've got support down towards the low 129s, and the resistance is up against 130, 40, 50. That's where we're looking at the moment. We've got another Bank of England member out this Wednesday, and we're going to see how this all plays out. But I think we're going to need to see some at least December and January data before the Bank of England pull the trigger. But that's something to watch. So I wish you luck this week, traders.